Volatile trading is in a full swing on Friday, so it's the right time to evaluate the recent news. We present you with a fresh review of the US market. Yesterday was a relative calm day compared to what we see now. Although markets were trading mixed intraday, all major indexes closed the session with a growth. However, their gains were rather moderate. The Dow Jones added 0.06%, the NASDAQ Tech Index advanced by 0.21%, and the S&P500 index rose to 4,283 points, having gained 0.23%. In the pre-market trading, major US stock indexes were staying deep in the red, losing their position at the rate of 0.53 and 1.15%. As for the daily trading range, the S&P index is expected to trade between 4,180 and 4,270 points. The stock market was a bit shaken after the publication of the FOMC July minutes and mixed quarterly earnings reports of top retailers. The fresh data released on the Thursday didn't clear up the situation. The published data showed that existing home sales declined in July, the sixth straight months of losses, and reached a two-year low. The real estate market is cooling down due to the sharp increase in mortgage rates. At the same time, initial jobless claims decreased by 2,000 to 250,000 last week, which is way below the estimated figure of 260,000. The latest data confirms the intention of the Fed to take some measures to stabilize the strong labor market. This increases the likelihood of a sharp rate hike in late September. At least this is the view held by St. Louis Fed President James Bullard, who supported a rate increase of 75 basis points in September in his interview to the Wall Street Journal. Just like Mr. Bullard, San Francisco Fed President Mary Daly and Kansas City Fed President Easter George favored further aggressive rate hikes on a Thursday. Now the odds between a 50 and 75 basis point rate hike are almost equal. Against this backdrop, the stock market sentiment seems quite pessimistic. The shares of the top companies with the largest market capitalization, such as Apple, Tesla, Microsoft, Amazon, and Meta, spent the pre-market session in the negative zone, losing their ground at the pace of 0.7 and 1.77%. Crypto and blockchain-related shares also plunged today after an unexpected sell-off in Bitcoin. Thus, Coinbase, a crypto exchange, and crypto miner Marathon Digital went down by 7.6% and 11.9% respectively. The shares of Bed Bath & Beyond also tumbled as the RC Ventures CEO Ryan Cohen confirmed the sale of his entire stake in the company. The retailer's second-largest shareholder cashed out 9.45 million shares and call options, making a profit of $68 million. Bed Bath & Beyond extended its losses on a Thursday before the opening of Friday's session, having dropped by 45% to trade at around $10 per share. Online furniture retailer Wayfair Incorporated announced on a Friday it would cut about 870 jobs, or 5% of its staff. The retailer is looking to lower operation costs and reassess investment priorities. Following this news, the shares of the company lost around 8% in the pre-market trade. The stock of banks and oil companies are suffering losses as well, and therefore the stock market may be quite volatile today. Besides, investors will have to evaluate the speech of another Fed's member right after the opening of the US trade. At the same time, expectations of a sharp interest rate hike boosted investors' interest in the US dollar. As a result, the US dollar index surged to its monthly high. Today, the USDX jumped to 108 points, but then declined to trade at 107.90. During the day, the US dollar index was hovering within the range of 107.60 and 108.40. The Fed's approach forced investors to put their money in the green bag. It's expected that the regulator will continue taking measures to control the economic situation and limit inflation growth. This idea was also proved by the Fed's meeting minutes disclosed earlier this week. The document reads that the Fed will continue raising the benchmark rate to prevent a further rise in inflation. In addition, on Thursday, 3 representatives of the Federal Reserve supported the hawkish stance. James Bullard said that he did not understand why the market wanted to postpone the interest rate hike for the following year. He intends to push the key interest rate to the targeted range of 3.75% and 4% by the end of this year. And the next Friday, on August 26, investors may receive more accurate information on the Fed's actions in the next few months. The fact is that Fed Chair Jerome Powell will address the annual Global Central Banking Conference in Jackson Hole, Wyoming. He is going to provide a long-awaited speech devoted to economic prospects. The US dollar index also increased amid a considerable decline in the European currencies. The British pound suffered the biggest losses. Such a slump could be explained by the UK consumer confidence data from the GfK. In August, the indicator slumped to minus 44 points, whereas economists had expected better performance. Against this backdrop, the pound sterling slid to a monthly low, depreciating by 0.8%. Meanwhile, the Canadian dollar dropped against the US dollar, though less significant than its counterpart. The USD CAD pair increased by 0.28%, approaching the level of 1.30, and thus the pair's range is between 1.2960 and 1.3020. Today, Canada disclosed its retail sales figures. In June, retail sales increased by 1.1% compared to the previous months. The data exceeded the forecast of a 0.3% rise. Data for May was upwardly revised to 2.3%, and retail sales grew in 8 out of 11 sectors. Notably, sales at gas stations have been increasing for 6 months in a row. Retail sales also grew at the motor vehicle and parts dealers, as well as in furniture and clothing stores. On a yearly basis, the indicator advanced by 11% compared to the 14.4% surge in May. What's more, Canada's core retail sales rose by 0.8% compared to a jump of 1.9% in May. Oil prices also decreased amid the expectations of a smaller economic growth in China. Thus, Brent crude dropped by 0.56% to settle at $96.05 per barrel. Meanwhile, WTI futures added 0.12%. Today, the crypto market was plunged into chaos, which caused a massive sell-off. At the beginning of the European session, BTC slid by 7.7% to $21,404 just in several minutes. In the middle of the day, the asset managed to recoup some losses. However, closer to the beginning of the US trade, BTC showed even a faster drop. As a result, it slumped by 8.48% to $21,430. Other coins also showed bad performance, thus either lost more than 10%, whereas Cardano, Solana, Ripple slid by 8% and 9% and 11% respectively. Notably, today's sell-off began with a Bitcoin and it still needs explanation. Some analysts see the key reason is the Fed stance, others in the sale of a stake in the Bed Bath & Beyond. In any case, the trading range for Bitcoin is between $20,800 and $21,800. And that's how this is how our analysts see the end of the eventful trading week. We wish you profitable trading even amid the highly volatile market situation. See you next time.